Nothing much to incrementally talk about except for the Nifty having given up a little bit of gains from the top. So just about holding at around 10,800 at this point. We have the mid-caps also which have worsened a little bit. So the mid-cap index, not much. So it's just profit booking at higher levels which is taking place, but just marginal at this point in time. A lot of specific stocks are declining within the mid-cap space. So I just want to point out even something like a Glenmark Pharmaceuticals. That stock is down around 2.5% at this point. We also have Bandhan Bank, like we've been pointing out. So that stock is at the low point of the day post concerns of maybe the valuations with regards to a possible merger with GRU. So that stock is down 3.5%. And Ashok Leyland is also in focus. That stock is down around 2%, 94 rupees currently for Ashok Leyland. So it's been a seminal fall for Ashok Leyland all the way from mid of 2018. But let's focus on a CNBC TV 18 exclusive now. India is on a good wicket in 2019. That's the word coming in from Deepak Parekh. Speaking to CNBC TV 18's Priya Sheth, he adds the liquidity issue has been resolved and NBFCs have now started lending.
As we enter 2019, how do the macro indicators look like? Is the worst over, perhaps, going forward? What is your assessment?
No, I think India is on a good wicket. We had this temporary liquidity issue, which the Reserve Bank from October, November, December have pumped in 40 to 50,000 crores each month under the open market operation to ensure there is sufficient liquidity in the banking system. So that has really eased the liquidity crunch which was there. And so I think the worst is definitely over.
So when you talk about the whole liquidity issue, what do you make of the current issue firstly, and also is it really a liquidity crunch considering the credit has been growing at 13 to 15%?
No, there has been a liquidity crunch. There's asset liability mismatch is also there, and we have to ensure that the mismatch is too limited because it is not viable to borrow short-term and lend medium-term or long-term. So the ALM mismatch which was there with some of the institutions has to be corrected and is being corrected. So I think there also, and the regulators may come out with some additional capital adequacy measures or prudential norms or something. So yeah, I think the worst is definitely over and liquidity is back in the system. I think NBFCs have started lending again, and many of them you'll see enter the capital market and raise some additional capital before it becomes mandatory.
The RBI recently allowed a one-time restructuring as far as the MSMEs are concerned. But do you think that sends out a bad message considering the fact that it is contrary to the RBI stand, saying that let's not postpone the pain going forward?
No, but I think we have to look at MSME with a little softer touch. They do play an important role, and they are always discriminated against by the banks for lending because they're tiny companies, they're small, medium companies, and the problem they have is that they have large debtors. The big companies, the bigger boys don't pay on time. The bigger boys take much longer to pay, and they have a working capital crunch. So I think giving them a little flexibility and a little moratorium will also help and is necessary.
Okay, always great to listen to Deepak Parekh weighing on a variety of issues, NBFCs and the liquidity situation in particular. Ashwini Gujral is with us to take us through what he's making of things. The market's off the highs by about 20-25 points, 85 on the Nifty now. Ashwini, good morning. So it's a big one, it's a big move, gap up, and which is sustained. Your sense in terms of what to do?
Well, you haven't built a point above where you opened. So I don't think how much comfort you can take. Basically, we are in this 10,650, 10,950 type of range. So possibly we will, slowly move up towards the higher end of the range before, something else happens. But as you can see today that there isn't great buying pressure above, say 10,850, 900. So that way, possibly market stays range bound while individual stocks do their own thing. Having said that, Axis Bank is a buy with a stop of 630, target of 656. Godrej Properties is a buy with a stop of 700, target of 735. And BF Utilities is a buy with a stop of 226, target of 242.
Ashwini, morning. What about Ashok Leyland and Bharat Forge? Do you see further downside on both these stocks? 52-week low for both of them.
See, they have been consistently coming off. So now, you can see the news why that was happening. I would think Ashok Leyland is getting back towards 80, 82, the place from where it bounced back. Similarly, Bharat Forge, it's an industry-specific issue. So my sense is even there, you could see more downside and maybe get close to levels of 350, 370. Definitely, both these stocks are not worth buying right now.
Okay, well, we have a Twitter query right now. Aliskar Khambati has 50 shares of Avanti Feeds at 600, wants to know what to do, hold or sell.
See, first of all, he or she should, develop some sort of discipline. I mean, it's very difficult to advise people once they've lost 50% of their capital. So whatever you buy, have a 10% type of stop. The problem here is that you bought it in a downtrend, and in a downtrend, lower lows keep coming. Now, if you want to stick with this, you have to average down because the price is 380, way below where the person has bought. But it looks like it's kind of bottoming out, and after a bad mid-cap, small-cap year, if you buy here and keep an overall stop of say 320, 330, then you can maybe expect as the markets move up, maybe the stock to recover. But if you keep hanging on to 600, it'll be a long while before your stock recovers.
Another name which has come up, and now actually two stocks, Ashwini. One is InfoEdge. What a move it's having, right? I mean, it was 1420, 1430 a couple of days back, and it's at 1600 and 1620 plus. Ashwini, any thoughts here?
Well, if you see over a long period of time, it does go to these 1650, 1670 type of zone. Last 4 odd months, 1350 to about 1680. So if I had to buy, I would much rather buy at the lower end of the band. Often you have these news flows, X raised so much money, Y raised so much money, but finally nothing ever happens. So my sense is if you get it closer to 200 DMA, that would be a better zone to get in.
The other one is Dredging Corp, which has moved up about 30-35% last few days.
Yeah, that was a call. These PSU stocks, they have certain periods in time when they go up. This was 920, I think 3rd Jan 2018. From there, it's 1/3. So maybe, you can still have a couple of 100 points of upside, 500, 550, generally budgetary type stocks, and whenever the budget is nearby, this stock tends to move up.
Okay. All right, Ashwini, we're going to let you go on that note. Thanks very much for joining in and talking to us. So that's the view coming in on the markets for the Nifty, trending lower now. So 10,804 is currently where the Nifty is at. It's more of profit booking which is coming in for the frontline indices as compared to the mid caps. Time for some market opinion then. Kotak Mutual Funds Harsha Upadhyay says that 2019 will be better than 2018, adds that global growth slowdown fears are for real and will dampen market sentiment.
This year is going to be better than 2018, but I think in the first half of this year, the volatility could continue. There are several issues to contend with. Global growth slowdown fears are for real. I think that's going to dampen the sentiments across the globe. Then we have seen some of the domestic data which has disappointed. Although it is monthly data and you can't really predict a particular trend from that, but it's been disappointing whether you look at auto numbers or GST collections or some of those numbers. So, and Q3 is also likely to be lower in terms of earnings growth. I don't think there is a one-to-one direct correlation between US markets or global markets to our markets. And definitely it's not on a daily basis. Yes, when the sentiments turn, when the market turn, there will be an impact across the globe, across geographies. But once the dust settles, then people will see which are the economies, even in a lower growth world, which are those economies or regions which will still grow at a faster pace. And then slowly the investments will pick up in those geographies. And that's what is likely to happen. We are betting on some of the sectors that are closely linked to economic activity, for example, engineering, capital goods, cement, etc. And these are the industries where we have already seen some amount of pickup in terms of either order flows or volume growth. I think that should sustain into next few quarters. We are also positive on financials, ex of NBFCs and PSU banks. We are focusing more on retail private sector banks and corporate private sector banks.